Okay, come again, please, Edna. There is
the transaction that was done on 17th.
Yes.
Took a loan from Mr. Storm.
Yes.
25,000.
Yeah.
And then there is a.
Let us handle that first. Let us handle that first. Took a loan from Mr. Storm of 25,000 shillings. And that,
yes.
The 20,000 shillings, was it in cash or bank?
It has not been indicated.
Okay. So one thing you need to understand is this: when you borrow a loan, there is money that money is coming in, and at the same time you are creating a liability. You are creating a debt to somebody. So in this case, we were supposed to debit the bank account. We debit the bank account because actually the money is coming in into the bank, and then we credit the loan account, or you can credit the name of the person who gave you the loan, because that is now the liability. So anytime asset is increasing, in this case, money is coming in, so we debit the bank, and I presume it's supposed to be by check. So you debit the bank, then you credit either the loan account or you credit the name of the person who gave the loan, who is now Storm, Mr. Storm.
So Mwalimu, on that note, from what you've just shared,
yes.
So I actually opened a loan account.
Yes.
And I opened a Mr. Storm's account.
No.
So I didn't touch the bank.
You know now, both of them, and anyway, let me not cut you short. In that case, which account did you debit and which one did you credit?
So on the loan account, because there was also an additional Mr. Wind there, so the loan account has two people, Mr. Storm and Mr. Wind, and both of them, based on the transactions, I debited, on the loan account, I debited Mr. Storm, okay, the 25,000. Then on Mr. Storm's account, I credited the 25,000, yeah. So it balanced out. And then Mr. Wind, I included him also in my loan account, and I debited the 3,000. And then when we happened now to pay back Mr. Storm on the 26th, I then credited my loan account, the 15,000.
Okay, anyway, it is very interesting. You know, your trial balance, balance, there are some mistakes that you can do, but your trial balance will balance.
And yes, like mine did. So I guess it's the mistake I did, but it's still balanced.
Yes, we have some mistakes that you can do, but your trial balance will balance. And the mistakes that you can do and your trial balance balances are those mistakes that you debit an account and you credit another one, but you have either debited a wrong person or you have credited a wrong account, something like that. In this case, when we talk about the loan and Storm, both of them are actually liabilities. Both of them are actually liabilities. So the correct position was, whenever there is a loan that is being borrowed, obviously you are receiving money from that particular loan. There can't be a loan without money coming in. So you are receiving money, at the same time you are creating a liability or a debt of equivalent amount. So here, if you had debited the cash or bank account, it was very okay, and then you credit the loan or Mr. Storm account, because either they are liabilities, cash or bank, they are assets, and one of them must be increasing. One of them must be increasing. So in this case, Emily, yes, you debited an account and you credited another one, but you did on the wrong accounts. You did on the wrong accounts. That's why your trial balance did balance.
Mwalimu, question.
Yes.
If you get loans from different banks,
yes,
are you saying you need to create accounts for all those banks?
Yes.
Each bank you get an account.
You see now, like in this case, actually it's not a bank. It is from individuals. There is a loan from Storm, and there is another one from Smith. You see, it is not coming from the same source. If you go and credit Storm, it simply means that you have a liability or a debt to Storm of 25,000. If you borrow another loan from Smith and you credit Smith account, it simply means that you have a debt to Smith. But when you come and bring and put that amount in one account, it will look as if you are owing one person a total of 28. But in the real sense, 25 is for another person, and then 3 is for another person, both of which are different creditors or are different.
Is it okay? Is it okay if you create an account for loan, then you credit both the person who have given you the loan?
You open the loan account.
Yeah, and then post the two people who have given you the loans there as creditors.
You know, when you now open the loan account, let me put it clear. When you go to the loan account, first of all, the loan account will be credited. If it is going to be credited, you will credit using how the loan was issued. You will not credit by the name of the person who has given you the loan. You are going to credit it using how the loan was given. If it was given by check, you are going to credit the loan account by bank. If it has been given in the form of cash, you are going to credit the loan account by cash. You will not credit actually by the name of the person. And then if you have credited by bank, then it simply means that money was received in the bank, so you debit the bank account. If you have credited the loan account by cash, it simply means that money came in form of cash, so you debit the asset cash account by that amount. So you'll find that in the loan account, you are not going to have the name of the sources. The name of the sources of that particular. We are going either to have cash or bank. That's why I was saying, anytime there is a loan, there is either money coming in form of a check, or there is money coming in form of a cash.
So Mwalimu,
yes.
Okay.
So when the question said amount paid to Mr. Som on loan account, so we are not supposed to consider that as an account to open.
Can you come again on that statement? Amount paid to?
On 26, there was an amount paid to Mr. Storm on loan accounts. I mean, the words loan account do not actually mean that we open a loan account, right?
Yes, I will take it personally as an individual liability. It is not a liability that is general. It is an individual liability to Storm. And
okay.
That's why it's actually preferable. If it is a loan that is coming from an individual, you better open an account for that particular individual, so that at the end of the day, when you borrow the loan, you credit the account for that person, and when you pay that particular loan to that person, you debit the same personal account, so that at the end of the period, now we can be able to calculate the balance that we still owe that particular person.
Okay.
Yes.
Thank you.
Okay. Mwalimu,
Yes.
my second question was,
Yes.
just a minute, received check
Yes.
from Mr. Wind on loan account. So it wasn't clear, was the cash that Mr. Wind was giving us, was it a loan, or was he trying to repay? I didn't understand the statement, because Mr. Wind does not appear anywhere on the previous transactions.
So it was the first transaction we have with Mr. Wind.
Yes.
If it is now a first transaction we are having from Mr. Wind, then it simply means that we are taking a loan from him. We are taking a loan from him. Is it clear? We are taking a loan from him, so therefore we debit the bank account because it is coming in form of a check. Then we credit Mr. Wind because it's a liability we are creating.
Final question.
Yes.
Cash deposited into the bank, 50,000.
Yes.
Now my question is, are we taking the cash from whatever is in the cash account to the bank, or it's just cash that has been brought in?
Okay, whenever you are depositing cash to the bank, you are depositing the existing cash. You are depositing the existing cash in the cash box. Now you are transferring part of it to the bank.
So we debit the bank and then we credit the cash.
Exactly.
So Mwalimu, I'm not sure if you answered this before I joined, but on transaction number 13, I don't know what feedback you gave. It was a bit confusing. Both goods were 20 from Star and payment made by check. So was there supposed to be a Star account? Yeah, so maybe you can clarify on that one as well.
Okay. Anytime goods are bought and money is paid for them, there is no need of opening the account for the person who sold the goods. If we make a mistake and open the account for Star, it will look as if we owe Star a certain amount of money, which in this case we don't owe Star anything because it was paid. So the correct position there, those are some of the few things that are meant to confuse you. Anytime goods both are paid for, you credit either cash or bank because money has been paid.
Mwalimu hatukusikii.
Still you can't? Or it's okay now?
That's okay now.
I think I don't have to put my mic far from my mouth. So I was saying this. We cannot open the account for Star. And the reason why we cannot open the account for Star is because Star is not a creditor. Star is not a creditor and the money has already been paid. So the account that will be affected here, because payment was made by check, the account that will be affected is the bank account. Bank account is the one that is going to be credited because there is a reduction in cash at bank. And then we debit the purchases because those are goods.
Thank you.
Yes, yes.
Mwalimu, come again on where to credit and where to debit.
Okay, I was saying this. Whenever we buy goods, and maybe I can go a bit far, and then I say, whenever you buy goods, goods can be bought using three means or using three ways. You buy them and pay for by cash, and you buy them and pay by check, or you buy them on credit. Those are the three ways you can acquire goods into the business. If you acquire them on cash basis, then you have to credit cash because cash is reducing. If you acquire them by check, you'll have to credit the bank because cash at bank is reducing. If you acquire them on credit, you normally credit the name of the supplier because now we are creating a liability and increase in liability is going to be credited. So in those three, remember all of them are going to be credited. If it is by cash, you credit cash. If it is by check, you credit bank. If it is on credit, you credit the supplier. So in this case, if payment has been made, don't make a mistake of opening the account of the supplier. Because if you open the account of the supplier, it will now look as if we have not paid. It will look as if we have not paid, and yet we have paid for that. So the account that was supposed to be credited here is the bank account. You credit the bank account, you debit purchases. And we said this, anytime goods are bought, we debit the purchases account. We debit the purchases account. Is it okay now?
Yes, Mwalimu, it's okay.
Okay. So I think now we can go to the question that I sent you today. We use it to illustrate. And then I think after doing that question, everybody will be so comfortable to handle any question dealing with the Rangers. So let me go to my board. So I will ask one of you to read for me the first transaction.
First May, BR starts business as a sole proprietor with 20,000 US dollars in cash.
In cash, huh? So anytime the business is starting, we'll have to open the account for capital. So we need to have the capital account. And the capital, whenever the business is starting, it is increasing, and increase in capital is supposed to be credited. So this was on which date?
That was 1st of May.
May 1. And that capital was in cash form. And how much was it?
And that's 20,000 US dollars.
20,000 US dollars. And then we go ahead and open an account for
Cash.
cash account. And the cash, remember, it is an asset. Huh? Anytime you open an account, you need to remember which category does it belong to. And an asset, because it is increasing, we need to debit it. The same date, May 1, it is increasing as a result of capital. And this capital is 20,000. Like that. The second transaction.
That's 2nd of May, paid 15,000 cash into a business bank account.
So it's like transferring the cash that we had, the 20,000 cash, we are taking it to the bank. So already we have the cash account. Now we open the bank account. So you need to ask yourself, money is moving from cash to bank, both of which cash and bank are assets, but one of them is increasing and the other one is decreasing. The one that is receiving is the one to be debited. And in this case, it is bank that is receiving. This one is May 2nd. And the money is coming from cash. Is it 15,000?
Yes.
So on the same date, this money, 20,000 that was in the cash account, 15,000 is actually taken to the bank. So it is a reduction. We are subtracting 15,000. So we shall come here and say on May 2nd, there is a reduction of this amount and it is going to the bank. 15,000 of it. Like that. So anytime we credit the cash account, it simply means that money is moving out. Anytime we debit it, it simply means that money is coming in. Higher. The next transaction.
On the 4th of May, purchases goods on credit from JM for 2,000.
So remember, anytime the goods, remember we said it is stock. Anytime we are bringing in additional stock, that additional stock is normally recorded in an account called the purchases account. So we need to open the purchases account. And this is where we record all the goods that are bought. And remember, we strictly record goods only or items that are in stock form. And the purchases account is always debited. You said May 4th?
Yes, that was May 4th, yeah.
It was purchases or goods were bought on what basis? Cash, bank, or credit?
On credit from JM for 2,000.
JM, 2,000. So if it is on credit, you debit purchases with the name of the supplier, and then that supplier is a creditor. That supplier is a creditor, and a creditor is actually a liability to the business because it simply means that it is a debt. We need to pay that particular person. We shall open the account for JM. Then this account, we shall have to credit it because it is a liability. Anytime the account is meant for a debt or it is a debt that we owe that particular account, we credit the liability. So this is on May 4th. The debt is coming in as a result of the purchases that we made from him of 2,000.
One more question.
Yes.
Why don't we call the account creditors instead of JM? If you have two creditors.
Now the problem is this. Okay, I've heard you. Thank you. Let me respond. Whenever you have got many creditors and you are given the name of each and every person, you need to open the account for every person. You need to open the account for every person so that at the end of the period, you will know the balance that you owe each and every creditor. When we put it together, we cannot be able to know how much do we owe a particular creditor, how much are we supposed to pay the other one, because in between the beginning and the end of the period, some will pay. So, like for example, if we go to maybe date 10, you might find that we have paid JM and we have paid the 2,000, so we don't have the debt to JM. And maybe we have other like 4 creditors, some of whom we have paid partly. So we need to open an account for each and every person so that it can be easy for us as a business to be able to know how much we owe each and every creditor instead of having all of them put together. Have I answered you?
Yes, Malim.
Okay, thank you. The next transaction.
So we are at JM, and then the next one is May 6th of May, purchases goods from ERD on credit.
Okay.
For
ERD, yeah?
ERD.
That is May 6th.
That is May 6th, yes.
So we shall debit. Remember, any goods that are good, any goods, they are going to be debited in the purchases account. So we are going to come here and debit the purchases account with another supplier, ERD. How much was the goods?
It was 3,000.
So we have brought in additional stock of 3,000 from ERD. So we shall go ahead and open an account for ERD as a different supplier. Remember, this one is also a liability. And whenever we have created a liability, that liability account is supposed to be credited. So we shall come here and say on May 6th, it is coming as a result of the credit purchases that we made from the ERD of 3,000. ERD of 3,000. The next.
The next transaction is on 7th of May, paid wages in cash, 60.
So one thing we know is that if it is an expense that is being paid, we shall open the account for that expense. We shall open the wages account. And expenses are always debited whenever they are being paid. So we shall come here and we say this one is on May. Remind me the date and the amount.
That wages is on the 7th of May, and paid wages in cash, 60.
60. So we debit it like this. And then we shall go to the cash account. And remember now, To the cash account is a reduction because we are paying. If it is money moving out, we put it on the credit side of cash. And we write here where it is going. It is going to pay the wages of 60, like that. The next one.
Paid rent. That's 10th of May, paid rent by check, 80.
That is rent. It is another expense, so you open the rent account. You come here, you say the credit side, the debit side. It is an expense. This is May 10th. We paid by check, so it is going to affect the bank account, 80. So to the bank account, it is a reduction. It is a reduction to the bank account. Money is moving out. If it is moving out, then we subtract by crediting. May 10, the money is going to pay the rent of 80. The next transaction
is sold goods on 12th of May. Sold goods for cash, 210.
Whenever you are selling goods, you are supposed to record them in an account called the sales account. We are supposed to go ahead and record them in the sales account. And the sales is actually the opposite of purchases. Purchases we normally debit when we are acquiring more stock. But when we sell the same stock now, it is supposed to be credited in the sales account. It is credited in the sales account. This one is on May. May what, please?
So that's May 12th.
We sold by cash or credit?
Cash. Cash.
Cash of how much?
210.
210. That simply means when you sell an item on cash, it simply means that you are receiving the cash. You are receiving the cash. So to the cash, you are going to debit it. You are going to debit it, and you say this money is coming from sales. 210, like that. The next account or the next transaction.
Bought furniture on the 16th of May, bought furniture for 1,500, paying by check.
Then you need to be very careful. When you buy furniture, you cannot record it in purchases. You cannot record it in purchases because furniture is not part of stock. Furniture is not actually an item that is being bought to be sold. So anytime we acquire fixed asset, we normally open an account for that particular fixed asset. And I hope you remember what we said about fixed asset. These are items that are bought to be used in running the business, but they are not meant for sale. They are not meant for sale, and they are going to be in the business for more than one financial year. So we need to come here and open an account for furniture. We open an account for furniture. And because it is an asset and it is increasing because we are buying, we debit it. This is on May, you said May 15th?
May 16th.
May 16th. You say here, we bought it on credit, cash, or bank?
Check, 1,500.
That is bank. 1,500. Then we go to our bank account. Remember, we are using that money to acquire furniture, so it is a decrease. And a decrease is recorded on the credit. You write here, it is decreasing to buy furniture, 1,500. 1,500, like that. The next one.
Sold goods on credit to SP for 580.
We sold the goods to SP. So
yes, on credit.
SP, if it is on credit now, SP, remember, it's a customer. you need to differentiate between a customer and a supplier. Those people to whom we have sold goods to, they are actually customers and they are known as the debtors. They are known as the debtors. And actually, the debtors, it is not a liability because it's a debt. They are the ones who have our money. We owe them. Sorry, they owe us. They owe us. So, customers, whenever they buy goods on credit, we normally debit them because they have our money. So, the money that they are supposed to pay us, it is our asset or it is our resource. We debit them. This is on May, which date?
19th.
19th. It is as a result of sales of
Goods.
how much?
580.
580. So we debit this account. Remember, for the others, we were crediting them because they are liabilities. This one and liabilities are actually suppliers. And this one, we are debiting them because they are customers and it is our money they have. Then we shall have to go to the sales account. And sales, as I said, it is supposed to be credited always. You write here, there is sales that was made to SP 500 and, was it 510?
And 80.
Okay. $580 like that. Then the next account or transaction.
So the next one is 22nd of May. Bought goods for cash 3,900.
Bought goods. Anytime it is goods that are being bought, we go to purchases account and cash account because they are in cash form. So the moment we buy something, we are spending cash. So to cash, it is a payment. We put it on the credit side. Remind me the date.
That's 22nd of May.
22nd, sorry.
22nd of May, cash 3,900.
22nd, we bought them. Sorry, it is purchases, not cash.
Yeah.
It is supposed to be recorded as a purchases. So this cash is reducing to acquire the purchases. Amount?
3,900.
3,000. So cash is reducing by 3,900 to acquire the purchases. Then now we go to our purchases account and we debit it. And we write here cash 3,900 like that. The next transaction.
The next one is that was May 22nd. Yes. So bought fittings on the 24th of May. Bought fittings for cash 600.
So fittings are in the same category of the furniture. They are things more or less the same as the shelves and all that. They are in the category of as fixed assets. So we shall have to open the account for fittings. So this is on
24th of May. Bought fittings for cash 600.
So it is affecting cash 600. Then we go to our cash account. Our cash account is reducing because it is actually being spent on the 24th. We are spending our cash in acquiring the fittings. In acquiring the fittings of 600. 600. So note at this point, anytime you are talking about cash, it is either an increase or a receipt we debit, or it is a payment we credit. Let us proceed to the next one.
25th of May, paid wages by cash 110.
We had wages account somewhere.
Yeah.
So 25th,
Yeah, 25th.
we paid the wages by cash
Cash 110.
110. It simply means that cash is reducing again as a result of paying that payment. So we write here on 25th, there is a reduction towards paying the wages, 110, like that. Next,
27th May receives part payment from SP of 330 by check.
so we are receiving money from the customer. SP, the customer SP is paying. So whenever a customer is now reducing the debt, remember SP had a debt of 580 that came as a result of the goods we sold to him. Now, the moment he pays, we put that amount now on the credit side. When the customer buys, we debit. When the customer pays, we credit the account of that customer. So it is on May 27. He is paying by check, so it is affecting the bank account. How much?
330.
330. So to the bank, money is being received. This customer is paying us and is issuing the business a check. So this one will be increasing our cash at bank. Cash at bank, there is a receipt, so we debit. This is on 27, and the money is coming from SP. Remind me the amount, please.
That's about from SP, that's 330.
330, like that. The next one,
Yeah, the next one I think has an error. There's no amount indicated. It says paid advertising by check. There's no amount.
by check. Let us put it the amount there. Let us put amount and say 100. We pay advertising by check 100 shillings. So to the bank, is it on that yet?
Sorry about that. So paid advertising by check on the 28th May.
Uh-huh.
Paid advertising by check on the 28th of May. So there's no amount. So we are guessing an amount.
Yes.
It's Esther, can you mute?
Esther? Okay, on 28th, there was advertising that was paid. And this advertising, we are saying that it will be 100. There was an omission there. So to the bank, it is a reduction. That's why we are crediting the bank account because money is moving out. And then we shall go ahead and open an account for this particular expense known as advertising. So we shall open advertising account. Advertising account. And because it's an expense, we do debit it. Are we done?
No, one, I think two more. So 29th, sold goods on credit to KM for 80.90.
Okay. We don't have an account for KM, so we open KM account. As we open the account for a person, you need to know whether it is a creditor or a debtor. In this case, it is a debtor because this is a customer. This is a customer. So we are going to come here and debit it. May 29th or 30th?
That's 29th.
So as a result of sales, you said 20, 80.
80, 90.
80, 90. So to the sales account, we credit that account as always. Sales on 29th, there was sales that was made to KM 80, 90, like that. Let us go to the last one.
On the 30th, withdraws 100 cash for his personal use.
And that's where we said anytime you hear the word personal use, the account that is normally opened is known as the drawings. Drawings account. That is the account where items that are meant for business but taken for personal use are recorded. So the drawings account is always debited. You come here on the debit side and you say on May 30th, the drawings was from cash or from the bank?
From cash.
How much?
100.
100. Then it simply means that the cash that was meant for business is reducing. The cash for business is reducing because it has been taken for personal use. So you come here and you say on 30th, cash is reducing as a result of drawings of 100. And you have posted all the transactions. The next thing now you need to do is to balance your accounts. And after you have balanced your accounts, you can go ahead and extract your trial balance.
Mwalimu, a quick one. So when we hear personal use, it's drawings. What about office use? It's petty cash?
For office use, that one is taken to cash. Eh?
Okay.
Yes, for office
so
use.
So we open a petty cash or we take it to the cash account?
You open cash account. Cash account.
Okay.
I
think the question is
clear.
which is the corresponding account if you're withdrawing for office use, so you reduce the cash and then we open a petty cash or just
no.
that?
Whenever money is being taken to for office use, whenever money is taken for office use, obviously it is coming from the bank. You will be told withdraw 10,000 from the bank for office use. So you credit bank because money is moving out of the bank account. You debit the cash because money is being received in the cash account.
So. Thank you.
Okay, somebody else was also.
Yes, I have a question, Mwalimu.
Yes.
Just to understand, why do we always credit the sales account?
Yes.
What's that explanation? And then maybe just the explanation for me to understand how we treat the wages.
Okay. Allow me to start with the sales account. Sales account or sales generally, it is categorized under the accounts we call revenues or incomes. It is a source of income to the business. And revenues, whenever they are being realized, the revenues are always supposed to be credited. We normally credit the revenues and then we debit either cash or bank because it is money coming in. Money coming in, we debit either cash or bank, and then now we credit the source of the money. We credit the source of the money, which is actually now the sales. And because sales, as I've said, it is a revenue, money coming in, we normally put it on the credit side. We normally put it on the credit side. Other books, they argue that these goods that we are selling, they are actually what we call stock. Just a minute. I was saying that the goods that we are selling are actually the stock that we had bought. Generally, we are supposed to prepare stock account, but they argue that we cannot have stock account simply because when stock is being acquired, it is acquired at a lower value, and when it is sold at a higher price. So the stock account is the account that has been split into two to record the purchases whenever the stock is being acquired, and to put it on the sales whenever the stock is being sold. So if it was stock account, when we acquire it, we are supposed to debit because it is an increase in the stock account. And when we sell it, we are supposed to credit it because it is a decrease in the stock account, which is an asset. At the back of your mind, you need to know that stock is an asset. Increase, we debit. That's why whenever you buy it, we debit the purchases account, and whenever we sell it, we normally credit the sales account. But the best explanation is that sales is a revenue, and revenues, they are normally credited, and then we debit when we debit cash or bank, because that is going to be the destination of that revenue, either to the cash account or to the bank account. Is it answered?
It is. I was asking about the wages.
Okay, the wages.
Because you said we credit the wages, we debit the wages, I mean.
Okay. I was wondering, how did we credit the wages? All the expenses, all the expenses, generally, they are supposed to be debited. Yeah? And the argument is this, that expense or an expense, it is something that we have bought, but we have bought it temporarily. Yeah? We have bought it for a very short period of time. So when you pay for the wages, it's like you have bought the services of that particular employee, yeah? But you bought it for only that 1 month. If you pay an employee 10,000 per month, it's like you have bought that particular services, or it is an asset you have bought to the business, but that asset is only meant for that duration of 1 month. After another month, or at the end of the month, you need to buy it again. It is something that you keep on buying. Similarly, if you pay rent, it is like you have bought that space in the business, but that particular space, you have bought it for only 1 month. You have bought it for only 1 month. So it is like an asset you have bought, but very temporary. A very temporary asset for a very short duration of time. That's why actually the expenses are always debited, because it is a special asset that you have bought, but on a very temporary term. So it keeps on recurring oftenly. So wages, not only wages, but any other expense, there is something that you have bought to the business, but very temporary, and that item is not tangible, you cannot see it, but it is an asset to the business because it was used in generating the revenue for that particular financial period. Answered?
Very well, thank you.
Karibu sana.
Malemo,
Yes.
one more question.
Yes.
I see when something has been bought by check,
Yes.
we write bank.
Yes.
Is there a mistake if somebody just writes check?
The reason is we don't have check account. We only have bank account. That's why checks, they normally affect the bank. That's why they are recorded as bank.
So.
Okay. Everybody is contented now?
Yeah.
Okay. I don't know whether you want me to go ahead and balance this, or you can go and now try on your own and you balance it and extract a balance.
Mwalimu, just balance
If possible for us to balance together.
Okay, you want?
Let's balance together.
We balance them.
Yes.
Yes.
Okay, let us balance them. Let us balance them. So balancing of the ledgers normally takes place on the last day of that particular period. And because these are the transactions for the month of May, we shall balance them on the last day of May. And that is on May 30th. I don't know whether May has got 31 or 30 days, but let us balance it as at the last date of the transaction, which was on 30th. So the idea of balancing is very simple. Identify or just look at the two sides of the ledger accounts, each and every ledger accounts, and identify the side that has less. And then you ask yourself, the side that has less, it has less by how much? So like in this first transaction, it is clear that the debit side has got nothing, but the credit side has got 20,000. So the side that has less, we indicate by that amount so that the two sides can be equal. The issue of balancing is to make sure that the two sides are equal. The side that has less, you indicate an amount that is going to make it to be similar to the other side that has more. So here, because we are missing 20,000 for the two sides to be the same, we indicate here 20,000 at that, and that figure that we have indicated there is known as balance carried down. It is actually the balance for that account, and you put here the last day or the date, May 30th. So the figure that we have indicated so that the two sides can be equal, that figure is what we call the balance carried down, and we also call it the closing balance. So as we are closing the month of May, the capital account has a balance of 20,000. So we now put the totals here, 20,000 on the debit, and then we put 20,000 on the credit. Then remember, the balance carried down is the figure that you inserted the side that had less so that it can balance. So when we proceed now to the next month will be on, the next month will start on June 1st. The same amount that we closed May with, it is the amount that we are going to start the month of June with. So that money is known as the balance brought down. So brought down, it is the opening balance. Carried down is the closing balance. So we close the month and then we open the new month. We close the old month by the balance carried down, then we open a new month by balance brought down from the previous month. So what I want you to understand is this: if the carried down is on the debit, the brought down automatically will be on the credit. The carried down and the brought down, they cannot be on the same side. If the carried down is on the debit, the brought down will be on the credit, and that amount of brought down is normally indicated below the totals. Remember, you must indicate two lines like this, and these two lines simply means the total. So you indicate the 20,000 below the double lines like that. And that account is balanced. Then we go to the next account. This one I need your help. You add the debits and you also add the credits so that we can be able to know which side has more and by how much. So the debit side is easy. It is 20,210. I want you to add for me this side, 15,000 plus 60 plus 3,900 plus 600 plus 110 plus 100. Sorry, come again.
19,770.
19,770, and this side has 20 to 10. What is the difference?
440.
440. So I want you to understand this first. This money that is on the debit side is the total cash that we received. And this amount that is on the credit side is the total cash that we paid out. So if we received 20 to 10 and we spent 19,770, then we have got a balance. The cash balance here, that is on that year, the closing balance for cash, balance carried down, you have said it is 440. 440. So if we put 440 there, each side will have 20 to 10. And this side will also have 20 to 10. Make sure that your totals are on the same horizontal line. Don't have it here and the other one down here. You just put it down to the same horizontal line. And then when we go to the next month, June 1, the opening balance or balance brought down is 440. The same amount we closed with is the same amount we shall start with as the balance. And as I said, the carried down if is on the credit, the brought down will be on the debit. The bank account, we received 15,330 and then we paid 15,300 and that is what we received, and then we paid 1,680. Can you subtract for me that?
$150.
No, it is more than that. Remember, this is 15,000. 15,330, and this is 1,500, 1,680.
13,650.
13,650. Is it okay?
13,320.
13,650.
13,650.
Okay, 13,650, yes. 15,330 minus 1,680. Okay. If we put 13,360, just a minute. If we put 13,360 there, then we shall have 15,330 on the credit. And here we shall have 15,330. Note the balance carried down will always appear on the side that has less, so that now it can total with the side that has more. So now the carried down being on the credit, on June 1st, the opening balance brought down will be the same balance we closed with, 13,650. That is balanced. We go to the next account, advertising. This one is faster. On May 30th. Note that all the closing balances, they are having the May 30th because it was the last day. Balance carried down. Good. That is balanced. We go to the next one. This side has less by 80-90, so we indicate that amount there. So I hope you are able to follow that. the carried down is the closing, and the closing will indicate the last date of the month. The brought down is the first date of the next month. So the total purchases that we made in that particular period, this is 8,900. So as at May 30th, so the opening balance will be the same on June. May 30th, the balance here so the opening balance on June 1st JM it has less May 30th. So the carried down is on the debit, so June 1st. Balance brought down 2,000. This is on May. The closing balance. Then on June 1st, the brought down will be credit. Brought down, sorry. So on that particular day, the balance carried down 170. So carried down is here, June 1st. So on that year, May that year, balance carried down 8. So that when we go to June 1st, sales how much is this? Can somebody add for me? 890 plus 580.
$88.80.
8880. So yeah, they made that here. So that we have 1500. So June 1. SP, we sold goods to him of 580. He paid 330, so he has a balance. As at that year, the balance is how much? 250.
250. 250.
Yes, thank you. So that it can be 580. So the balance brought down is 250. Lastly, we have the drawings account. Sorry, this is balance carried down of 100, 100. So the beginning of the new month, June 1, the balance brought down is 100. So after so doing now, you are supposed to go ahead and extract your trial balance. What was the name of the business? J.U.
It has no name.
The first statement was saying, the first transaction?
BR.
BR.
BR. Let me just call it BR Traders. Then I capture that as trial balance. As at, you write there the last day, that year, May, something like that. And then you just underline your heading. Have your two columns for the debit and credit were drawn, and the credit balances. So, and here we have the column for the accounts. So the first account was capital. It had a credit balance of 20,000, if I can remember. There was cash account. Anybody with those balances who can read for me so that I do it a bit faster?
Cash for 40.
of what debit?
Yeah.
You look at the brought down. Don't look at the carried down. Then we had the balance.
Okay.
Had a balance.
Sorry, for some reason I didn't do that one.
13,650.
13,650 debit. There is another one. Another account is from bank we went to
Purchases.
the balance is a debit of
8,900.
then from purchases we went to
JM.
debit or credit?
Credit of 2,000.
Credit of 2,000. Then from there
ERD.
ERD. Credit
of 3,000.
3,000.
3,000.
Then there is another account, right?
Wages.
Wages. Debit of
170.
Then another account is
Rent.
debit of
80.
80.
Yes.
Then another account
Sales.
credit of
88.
88. Then another account is
Furniture.
furniture, debit of
150.
the other account is
SP.
1,500.
debit. Next.
150 or 1,500.
Confirm.
Furniture was 1,500, I think.
And then SP.
Furniture was 1,500. SP is 250.
250
debit.
250 debit. Okay. If we are not so accurate, it will bring problem in balancing. Then from SP,
Drawings. 100.
100 debit, and we are done.
Yes.
There's advertising.
Advertising.
Yeah.
Advertising and KM and drawings.
Advertising was okay. Debit.
100.
Advertising also.
100.
So it was 100.
Yes.
100.
Okay, then there is who? KM.
Yes.
100.
KM 8.
KM.
890.
Debit or credit?
Debit of 890.
890 debit.
Yes.
8090.
Oh, sorry. I had 8090. That's all.
Yes. Where do we put drawings, Molly?
Drawing is a debit. It is here. It is here. Drawings of 100. It is a debit balance because yes.
I guess fittings.
Sorry.
Fittings.
Fittings.
Yes, we need to capture all of them.
It's 600.
How much?
600. Debit.
Okay. Confirm whether there is anything that we have left out. Everything is captured?
Looks like so.
Yes,
Yeah.
everything has been captured.
Yeah, and also it looks like it is balancing because I've gotten
Yes,
the
it
total
is.
of 33,800.
Yeah, 880 or
33,880.
Yes, yes,
Correct,
yes.
correct.
Then
that is what we're getting.
that is then we have done a good job. So that is how now it's supposed to be. Once you have recorded your entries correctly and you have extracted the balances correctly, your trial balance needs balance. Your trial balance needs balance. I want to give you some assignments to do on your past papers. It is December 2017.
Let me have written 13,880.
13? Oh, okay, okay.
You have written 13,880 on the other side. That's why I'm.
Okay, okay. It is 33, sorry. 33,880. December 2017. December 2017. December 2017. If you are there, if you look at question 2,
Are you okay?
Yes, are you okay? Really?
Oh yes, I am sorry.
Hiyo swali inakaa ni ngumu natetema.
that question is very friendly. I want to give you a guide. I want to give you a guide. Question 2.
Sorry, Mwalimu, I got kicked out. Where is the question?
December 2017. December 2017, question 2.
Oh. Mm-hmm.
So on that question of December 2017, you are told that the following balance sheet reflected the financial position of Korea's animal feeds business as at 1st September 2017. So whatever you have been given there, it is the as at 1st December, that balance sheet. We shall do the balance sheet later on in our unit, but at this point, you can be able to tackle that question. If those balances are as at first, remember they are the same as what we have been doing here. When we prepare the ledgers, we balance them, and then we have the balance brought that at the beginning of the next month. So anything that you can be able to see on that balance sheet, it is actually the opening balance, the balance brought down. Anything that you can be able to see there, it is the balance brought down for each and every account that is indicated there. So your work is very simple. You will come here. So you are told the fixed assets, they were worth 191,712. You will open an account for every item that you are given in that balance sheet. So you will open an account for fixed assets. Just open an account for fixed assets. Or assets, they normally have a debit balance. So the fixed asset account or assets, they will have a debit opening balance. Then you write there, this one was as at 1st September. You just write there September 1. The balance brought down is 191,712. That is for the fixed assets. Then, because you are given that amount cumulatively, you will go and open an account for the debtors. Open the debtors account. Remember, this is still an asset, but a current one. But remember, all the assets will have a debit balance. Just come here and it says September 1. Balance brought down. Opening balance 41,216. Just go ahead and open another account. Open another account called prepaid rent. This is an asset. You just write there, September 1, balance brought down. The opening balance is 11,605. All the assets have been captured. You just go on and you also open the capital account. Just go on and open the capital. Capital and the liabilities, they are going to have the credit balance. So you just write on the credit side, September 1, balance brought down 167,695. Do the same to the bank overdraft and also the insurance expense and also the trade creditors. Before now you go to the transaction. That was the only trick that you are supposed to do in that question. Open those accounts that are in the balance sheet and then now you post the others. Is it okay? You try it and then maybe next week. The first 20 minutes we spend on looking at that question and then we move on.
Will you do you get the question?
Yes. The question. December 2017 question.
We don't have the past papers. How do we get it?
You don't have it? I had to post. Okay, I will repost it again.
On LMS.
They're
Yeah,
on
they are.
LMS.
Yes.
They are on their MS actually. And if you think you are having a problem, also post it on the group.
Okay.
Alimu, I wanted to ask, is it assumed based on the table that what is on the left and the right, we assume that's credit, debit?
Anyway, the trial balance, not the balance sheet has been prepared using the traditional method.
Okay.
Where we use to debit the assets and the credit capital and liability. Nowadays we don't do that. Nowadays we don't do that. We normally prepare them using a vertical format where we don't have the debit and the credit. But the way it has been prepared, anything that is on the right hand side is actually supposed to be credited. So it has a credit balance, and their balances will be on the credit side.
Okay, okay.
So at that point, I want to end the class. And I hope now you are better off than you started the class.
Yes.
Okay.
Much better.
Okay. Okay, thank you very much. Let us end that point. The session, then we can revisit on Monday as we move to something else. And also do some practice. Or will do well. Thank you very much.
Thank you.
Okay, Karit.
Thank you.
Mwalimu.
Good evening.
Okay, good evening.